Krispy Kreme stock just pulled off what might be one of the sweetest two-day rallies we've seen in a while, no pun intended. After spiking over 26% on Tuesday, DNUT came in hot again today, jumping more than 23% in the pre-market and opening way up from where it started the week. But here's the thing, while the early action looked like another blowout, the rally tapered off fairly quickly once the regular session got underway. That's important. It shows us the momentum might be shifting. After opening strong, DNUT couldn't hold its highs. Intraday, the stock saw heavy volume but also heavy selling pressure, as traders who got in early, maybe even on Tuesday, started locking in profits. It didn't crash, but the gains were clearly less explosive than what the open suggested. Let's back up for a second and talk about what's driving this. On the surface, it all started with a birthday deal, Krispy Kreme selling a dozen donuts for just 88 cents. That alone doesn't change a company's financial outlook, but it did go viral. It tapped into nostalgia, brand loyalty, and social media buzz. Suddenly, Krispy Kreme wasn't just a donut shop, it was a trending stock. Then came the realization, DNUT was sitting on a massive short interest, about 30 to 32% of the float, depending on which source you check. That's heavy. And when retail traders on Reddit and StockTwit saw the setup, low price, cultural brand, high short interest, they pounced. The result? A near 50% two-day run from Monday's close to the highs today. We've seen this before. GameStop, AMC, Bed Bath. And now, DNUT seems to be sliding right into that meme stock lane. The ingredients are all there: retail enthusiasm, fast-moving options activity, call volume going parabolic, and a growing us vs them energy between retail traders and institutional shorts. But here's where today gets interesting, and maybe a little concerning for the bulls. The initial push this morning looked like it could be the next leg up in a full-on short squeeze. But the fact that momentum faded so quickly suggests either a lot of profit-taking, a lack of new buyers stepping in, or both. That doesn't mean the move is done, but it does mean the easy part of the rally might be behind us. Still, there's a case to be made for more upside, especially if momentum rebuilds. Even after this week's pop, DNUT is still technically trading below some analyst price targets. Bank of America, for example, trimmed its target recently but still maintained a buy rating, suggesting there's room for further gains under the right conditions. Now, let's be clear. The fundamentals haven't really improved. Krispy Kreme's last earnings report showed a dip in revenue and some operational softness. There's debt. Margins aren't great. And there's no new game-changing strategy, partnership, or product line announced. This rally isn't based on a business turnaround. It's based on sentiment, buzz, and the mechanics of a short squeeze. So where does it go from here? There are two clear paths. If the online chatter stays hot, if short sellers get squeezed further, and if traders continue piling in, DNUT could still have more gas in the tank. Stocks like this don't always move in a straight line, but they can surprise everyone when they catch a second wind. On the flip side, if the energy fades, this could cool off fast. Meme stocks can fall just as quickly as they rise, especially if retail traders start to rotate into the next trending name. That's the risk, and the thrill, of these trades. So if you're already in, now's the time to tighten your stops, take partial profits if you're up big, and keep your eyes glued to the volume. And if you're on the sidelines, be cautious. DNUT has gone from boring to buzzy in 48 hours, but what goes vertical often comes down hard. One thing's for sure, this week, Krispy Kreme wasn't just serving up donuts, they were serving volatility. And for traders looking for action, that might be just as satisfying.